Yeah, it's time to go. I want to say good evening, everyone. The time is 5:30, and we are starting right away. Good evening, everyone. How's that day been? I believe we had a nice day today. I hope the work was not so tedious. So yes, we started last week with the special race. We talked about the importance of insurance in the international trade. Yes, we discussed the importance of insurance in the international trade. So we'll be continuing on that. We still want to talk more. Last week we talked about, we started with the marine insurance. We said, well, insurance, generally the cover, we can have the marine hull or we have the marine cargo. And we said, the marine hull is when you are insuring the vessel, the ship itself. But the cargo, the marine cargo is when you are insuring the goods, and we talked about the categories of people that need marine insurance. If you're an exporter, you're an importer, you're a logistic company, if you have to move your goods from one place to another, from one country to another, you need marine insurance. So that was what we discussed last week. And today we'll be continuing on that. We want to talk about how to enjoy insurance benefits on your cargo. Just like I told us last week that we're looking at marine cargo, that is the goods that you are shipping, that you are moving from one place to another, from one country to another. So how do you enjoy the benefits of insurance on your cargo? First, we'll be looking at the underwriting consideration. The marine cargo insurance, just like we discussed last week, we said it provides cover to cargo owners, the cargo owners as a result of loss or damage. When you incur loss or damage to your goods, the goods are referred to as cargo. It's still the goods is the same thing as the cargo. So, but that is the word that is used in marine parlance. We said marine cargo provide cover to cargo owners as a result of loss or damage incurred to the cargo on the voyage. And the cover remains valid until the goods get to the final destination. How do I mean by that? When your goods leave maybe the warehouse in Nigeria and it's going to the warehouse in China, or it leaves warehouse in China to coming to a warehouse in Nigeria. So your marine insurance, the marine cargo insurance will cease, the cover will cease until there is a successful delivery of those cargo. So the period of cover is those periods from which your goods leaves the warehouse or the manufacturer, of course, the warehouse where you keep your goods, the warehouse in that country A, until it is delivered to the warehouse it is destined to get to in the country B. That is when the cover ceases. And we have duration for this. The maximum duration is usually 90 days. 90 days, or when the goods are delivered, whichever is earlier. Your goods might be delivered maybe in 30 days or in 60 days. The cover ceases once the goods are successfully delivered and there is no issue. So that is the duration. So today we want to let's look at some of the underwriting considerations of marine insurance. What are the things that is expected of you? What are the things that is expected of you if you want to effect marine cover on your cargo? So some of those things are, we look at nature of goods, value of the goods. We discuss this one after the other. Nature of the goods, value of the goods, the voyage, type of cover, type of vessel, and loss ratio. So we'll be looking at it one after the other. Now, nature of the goods is an underwriting consideration, is an underwriting factor when you want to effect cover on your marine cargo. Now, let's look at the nature of the goods. The nature of the goods says that maybe you want to, let's work with example. Let's say you want to ship in, we'll soon start exporting finished petroleum. Like once Dangote completes finally, you may have to export some oil. So when it is oil that's being the nature of goods, when it is something like oil, like petroleum, it will attract high rates than when it is something that is durable, like maybe it is a container of goods. Maybe you want to import, let's say, shoe. Do you understand? So the nature of the goods, why is it that, or you are importing or you are exporting cement? For instance, knowing that cement should capsize and pour on the high sea, you cannot recover anything. There is no way you can salvage it. So the nature of the goods is an underwriting factor when you are insuring your cargo. So when you are insuring like breakables, it will be, in fact, not all the underwriters are insured something like breakage, like glass and all those things. So the nature of the goods is an underwriting factor in your cargo marine insurance. So if you are importing or you are exporting something that even if there's if the ship capsized or if there's a damage, you can still recover some. That one, the rate will not be as high as once there's a loss or once there's damage, it cannot be recovered. I believe we can understand that. I believe we can relate with that. So nature of the goods is an underwriting factor when you are when you want to effect a marine cargo insurance. So the next one I have with me is value of the goods. Value of the goods. That is talking about the cost. The cost, I mean, what is the risk involved, the volume of the risk that is involved, because the premium is actually based on the risk that is covered, on the value of the goods. So when you have high volume of goods to cover, I mean, it will attract a high rate. It will bring the premium costs higher. So the value, the nature of the goods, the value of the goods, they are underwriting factors when you are looking at your marine cargo insurance. I believe we can all relate with that. Now, voyage. What do I mean by voyage? Do you want to export your goods, let's say from Nigeria to China or from Nigeria to America? No, the destination. Voyage is the traveling route. Where is the destination? Where are you heading to? So it's the length of days it will take you to move your goods from Nigeria to UK will be different from how Nigeria to maybe Australia. So all those ones are also factor. They are also underwriting factor when you are looking at putting on a marine cargo insurance on your goods. So voyage, I mentioned nature of the goods, I mentioned the value of the goods, I mentioned voyage. So voyage is also an underwriting factor. What do I mean by underwriting factor? Those things that the underwriters will look at that will make the underwriters to come out with, oh, this is the amount of premium we want to charge you. No, underwriting is the process of examining the risk and fixing the price, the premium rate. So in insurance, we always look out for what are the underwriting factors of whatever cover you want to effect. Then the type of cover, in the course of our discussion last week, we talked about the types of cover. It's also an underwriting factor. Where we talk about institute cargo clause, ICC A, B, or C. We say institute insurance cargo A, ICC B, we talk of clause, we talk of clause A, we talk of clause B, and we talk of clause C last week when we were talking about types of cover. So the type of cover you wish to have on your cargo is also a factor, because that will also determine the rate of premium, or the amount of premium you are paying for your cargo insurance. Now, the type of vessel. How do I mean by the type of vessel? What vessel? No, I mean, the age of the vessel? Is it what's the history? What's the record of the vessel you want to use? Is it a safe vessel? Is the vessel in good condition? What we mean by vessel is the container. How are you packaging? How are you packaging your goods? So that is also an underwriting factor when you are looking at cargo, marine cargo insurance. I believe we can all relate with that. Then the last factor I had here is loss ratio. You know, as maybe as the importer, you know, you are in the business of importing or exporting your goods. What has been your loss ratio? Have you been recording losses? Have you had any loss history and all those things? It's always a factor when you are looking at putting on insurance, or putting on a marine cargo insurance. So these are the factors that we consider when we are looking at marine cargo insurance. Now, let us look at the required document. There are some documents that is necessary when you are looking at putting on effecting the marine cargo insurance on your goods. If you are a first timer, if you are a new customer, the first thing is the underwriter will get your KYC. What is KYC from? Know your customer. Know your customer from, you have to, because the underwriter needs to get the material information about the person who wants to do the marine cargo insurance. So if you are a first time, maybe you are coming to underwriter for the first time, your details will be taken, the history, your business, you know, the detail of your business and the location of your business, you know, everything will be, you have to provide all those material information to the underwriter. Now, there's what the underwriter will always ask of you. If you are an importer or you are an exporter, or you want to say you want to do marine insurance, the first thing the underwriter will ask of you after your KYC is your pro forma invoice. There's a document that is called pro forma invoice. You know, that invoice, at a glance, it gives the underwriter, it helps the underwriter to know that, okay, this is what you want to import or want to export to the country, or from the country, that, okay, maybe you want to import maybe some cartons of chicken, or you want to, no, it depends. It gives the underwriter the description of the goods you are importing or you are exporting. Maybe you want to bring in electronic equipment, or you want to know that pro forma invoice will detail everything and will tell us the quantity. Maybe you want to bring 1 million carton of 5 alive drinks. You know, it will just detail it. Then it will give the underwriter the estimate of the cost, and based on that, the underwriter will be able to prepare the premium that's payable for the transaction. And there's another form that underwriter also always asks for. We call it Form M. Though in most cases, once you have pro forma invoice, it could be sufficed, but another time it depends on the conditions surrounding the contract. So it depends on the terms of contract or the needs, as the needs arise. There's this Form M, we call it Form M. It's also a requirement. That Form M is actually, every exporter and importer that I want to import, it's a declaration of your intention. That is what makes us do that. Oh, you are licensed, or you are in the business of doing that importation or exportation. So that Form M will make it will help the underwriter to understand that you are legitimate, you have the legal rights. You are legit, what we call legit, legitimately, you have that legal right to do the business. Then the last one, another requirement is what we call bill of lading. Another document is bill of lading. Actually, that one is if maybe as a logistics company you want to do your insurance, because that bill of lading is actually a contract between the transport company and the shipping company. Now, what's the relationship between the transport company and the shipping company? I said your marine cargo insurance, it takes effect from when your goods is moved from the warehouse in one country and it is delivered to another warehouse in the country of destination. So this transport company, you will first transport your load or your cargo, your goods from the warehouse to the seaport. Your warehouse will not get to the sea right from your cargo will not get to the sea right from the warehouse. It has to be moved from the warehouse to the seaport. So from the seaport, then it will be now be loaded and will be taken over the ocean or the waterways to the country of destination. So this bill of lading is a contract, it's really a contract, an agreement, it's a document that the transport company issue to the shipping company that, oh, these and these are the things you are taking on your vessel that you are exporting or you are importing, you are taking to the country. So it's a contract. It's also a form of document. So it's also in some instances too, is also required bill of lading. So when you are talking about insurance, we always do with documents. In fact, the business of insurance is business of documentation. So we always ensure that all the necessary documents are inside, because all these documents are what helps or aids the underwriter to have enough or adequate material information about the risk that the underwriter want to cover or want to take. So we always have all those documents ready. So what have I discussed today? I've talked about how to enjoy insurance benefits on your cargo. How would you enjoy insurance benefits on your cargo if you have not effected insurance? So apart from, just like I used to tell us that, yes, marine insurance is a requirement. In fact, it's one of the documents that you have to, is actually a requirement when you want to do import or export business. But apart from that, it is a requirement, there is a benefit on it, because it's not that it's just a requirement. It gives you that peace of mind. It gives you that confidence that should your cargo, should there be a loss or damage to your cargo, you have your underwriter to compensate you for the loss of your goods on the sea, or when maybe your goods are hijacked on the sea. So it's not just that, oh, because I want to export my goods or I want to import my goods, no, it's a requirement that I need to put on insurance. That is not, yes, it's a requirement, but the benefit, it is loaded with benefit. Because imagine, like for those of you in the room, imagine the picture I have on my slide here. You know, let's imagine that these goods, this cargo costs maybe, is it so maybe millions, hundreds of millions of naira or in dollars. Do you understand? Imagine if everything just turned and capsized and or it got lost or is hijacked. Imagine the huge loss the owner of the cargo would have recorded. So, but putting insurance in place, we give you that rest of mind. We give you that assurance that should there be a loss, you have your insurer will compensate you, will indemnify you on the loss of your cargo before it gets to the destination. You know, it is once it is delivered, of course, once the good is successfully delivered, the insurer no longer has a liability. But the insurance, as long as the cargo are still on the sea or before it gets to the destination, the liability, the insurer has liability should it crystallize. Should let the liability crystallize, the insurer will have to speak, your insurance will have to speak to that. I believe we can all relate with that. Because of our time, I want to stop now. I want to give room for comments or question. You know, it's just 30 minutes interactive section with Grace Flow. So I want to appreciate everyone that has been part of this meeting. And those of you that will watch the live stream program later, I want to say thank you. So if you have question or contribution, I want to leave out this time before we wrap up, round up the program so that you can ask your question. Thank you, everyone. So do I have anyone? Okay, Mr. Peter, thank you, sir. Kindly ask your question.
Okay. Good evening.
Good evening, sir.
Thank you for the wonderful presentation that you have made again.
Thank you,
now,
sir.
the question I want to ask you is that according to my understanding of international trade, in international trade, there's what we call Incoterms.
Sir?
Incoterms.
Okay.
I said my knowledge of international trade.
Okay.
There's what we call Incoterms.
Okay.
International trade. This is financial. This is financial. I don't know whether it's insurance.
Okay.
What that means is that it tells us how the goods will move from the seller, which is an exporter, to the importer. So depending on what is stated in the document, the Incoterms that is stated in the document will determine what type of who is going to bear who in terms of charges. Now, there are some Incoterms that will state that the exporter is going to dump the goods in the warehouse of the buyer, that is the importer. What that means is that all the expenses that has to do with the inventory of goods from the exporter to the importer will be borne by the importer. And there is one that is going to be, I don't want to use the technical terms because I know so many people that are here not really understand the international trade. Yes.
Okay.
So as if, pardon me, but I don't want to use all those terms.
Okay, sir.
They are already. Okay, so the question is this: that if according to Incoterms, if I want to bring my goods from abroad into the country, You understand?
Okay.
And the exporter is there all the time. Is there a way in which insurance companies in Nigeria work with the insurance companies abroad so that whatever they are going to charge, I'll be able to evaluate so that I will know whether it's worth it or it does not worth it. For instance, let me tell you what I mean by, for instance, there is what we call DOP in international trade. DOP means delivered duty paid. That means that you are going to bring it to my warehouse. I'm going to bear everything. Now the question is, the insurance company in Nigeria, they work with insurance company abroad so that if I have a consultant, be able to help to assess the cost that they're charging, whether it is overcharged or it is properly charged. That's the first question.
Okay.
And the second question is, in terms of documentation, you mentioned some documents that we have to give. One of them is pro forma invoice that you talk about.
Okay.
Now, pro forma invoice only states the goods that the importer is bringing in to the country, so then value of what the support is not the real amount that is going to be paid. So we have two types of invoices. We have the pro forma invoice and we have the commercial invoice. So the question is it the commercial invoice that the insurance company here will ask? Let us say, I'm going to pay for the insurance in Nigeria. Is it the commercial invoice that I'm going to use or the pro forma invoice? And again, you know that most of these payments that importers do, they don't pay the exporter directly. It's not a kind of, it involves the banks. Because before you can import anything, the banks must open what we call letter of credit for you. So, I mean, when they open that letter of credit, that is for them to be able to negotiate with their corresponding bank abroad. That is the advising bank, which is the bank that the exporter will use. So with that, they can tell their corresponding bank to make payments into the advising bank abroad. So the question is, if I want to do my insurance, will my insurance company not ask for that document so that they will see that genuinely I am importing things and those things that are importing are being paid for? Or the insurance company will just assume that yes, document is presenting to us because so that is the clarification I want to make. Thank you very much.
Okay, thank you, sir. I really appreciate you for those multiple of questions. I will take it as the one as it's I can remember because it's a lumped up question. But I really appreciate that. Yes, the first thing that you talked about, that who bears the cost of the insurance. So just like I've said, that it depends on what is in the terms of agreement. It depends. If, just like you have said, if the agreement says it is the exporter that will bear all the costs, or the importer, it depends on who is bearing the cost of the insurance. So if it is like, if the importer is in Nigeria and is bearing the cost of insurance, it will be the one to do the insurance. And if it is the exporter that is going to do it, that is abroad, and if it's the one that is doing the insurance, it will bear the cost. Actually, it's always, it not depends on the agreement. If you are the one paying for insurance, it might reduce the costs of purchase. But if you are not paying, if the insurance will not be borne by you, I mean, the real purchase, I mean, So it depends on the agreement. Whoever is from the agreement, if the importer is the one paying for the insurance and the importer is in the country, the person who is receiving the goods, if he's the one that is paying, that is going to pay for it, because you are the one, you are paying, you are the buyer. If you are the importer, you are paid, you are the buyer, you are paid. You will not want anything to happen to your goods. So you have to make sure that everything is borne by you, or and maybe it will reduce the payments you make to your international partner. So it depends on just like I said, it depends on the nature, the nature of the arrangements that the traders have between themselves. Just like in the normal buying and selling, it depends on what you are looking at. So, but what concerns insurer is that, okay, this person have a need, he's bringing his goods and he needs to, to do it, and it comes to the insurer will the cover for the person. So it depends on the agreement. So whoever is bearing the cost, you pay for the cost in your own country. Then you talked about letter of credit. Yes, it's part of just like you said, the letter of, okay, no, you talked about pro forma invoice. Pro forma invoice is an estimate. So, but because insurance is part of the documentation procedure, it's part of all the requirements before you can export your goods. So insurance is part of those documents that the custom will look at. So that is why we first ask for pro forma invoice. Yes, it's an estimate of that good. So if the insurer puts premium on the based on the pro forma invoice that is presented, by the time the payment is done via the letter of credit, by the time the bank issue that letter of credit, because by the time the bank will issue the letter of credit, the final amount would have been concluded. So if there is a variance, of course, if there's a variance, the owner of cargo or the insured will pay the difference. If not, if he choose not to pay the difference, the insurer will only, the liability of the insurer will only based on the value of the pro forma invoice that has been insured. I believe I've been able to answer that question. So it's based on the information, it's based on the information that is presented to the insurer. Insurer takes his decision, his underwriting decision based on the information that is provided. If pro forma invoice is provided, it calculates the premium on that. And if there's a variance between what is in pro forma invoice and what is in the letter of credit, and the insured is willing, has come up to say, oh, this is my total, this is my total risk. This is the total value of my risk, and you will just pay the difference of the premium, and you will know that is adequately, is fully covered. So that is how it is, sir. I believe I've been able to answer your question, sir. Have I been able to answer your question, sir?
Yes, thank you very much.
Okay, thank you, sir. I saw another person. Someone else was raising hands. Do we have another person? I saw two people raising hands. Kindly unmute and ask your question. Okay. In this of no other question, we have exhausted our 30 minutes. So I want to appreciate everyone that has participated in today's meeting. I want to appreciate your support and your contribution.
Hello, madam.
Oh, thank you, sir. Hello, Mr. Fatai.
Yeah. I just want to add to your comment on the question.
Okay, sir. Okay.
Very well, but that's a very good question.
Okay, sir.
The international trade terminology agreed to ease international trade to avoid ambiguity whenever there are issues. So wherever you see, because different countries speak different languages.
Yes, sir.
So when you have this generally accepted terminology, to anybody that sees on the invoice, know that they made the duty in different countries. You see, free on board FOP or
cash and freight, C and F, or cash insurance and freight. All these are the same. They meant the same thing all over the whole country. And when you talk about procurement, that one comes before the consummation of the business. These are the prices. This is what you are going to pay. You will send that. The seller will send that to you. And it's when you concluded to buy that the real invoice will now come to you. And all other things, I think you are very grounded in the international, the way you explain it. All those things are very valid. And the invoice will not be used to process. All these terminology are included on the bill of lading. When you say cost and freight, it means you are only paying for cost of the goods and the cost of transporting it. So you'll be responsible for the insurance. But if the amount you are paying is cost insurance and freight, it means the seller has included the cost of insurance in the price you are paying. So your underwriter will know that you factor in the insurance element, which is allowed in the marine business. And when they are paying for any loss that might have happened to the goods, that would be the basis of payment. But if it's only cost and freight, and you are responsible for the insurance, you are allowed to include the cost of insurance. Because you are not only losing the goods, you are as well losing the cost of insurance. Because that cost will only be utilized when your goods arrive safely. And you talk about warehouse to warehouse cover.
Yes.
That's what does it. So when the contract says that okay, the cover is warehouse to warehouse. Warehouse of the seller to the port of loading, throughout the voyage, to the port of destination, and from the port of destination to the warehouse of the buyer. So the goods will be covered. In case of any loss or damage, the underwriter will indemnify you for that. So based on what you said. So these are my few comments. Thank you.
Thank you, sir, Mr. Fatai. I really appreciate your contribution. I believe Mr. Peter to have understood it also.
So, sorry, madam.
Okay, sir.
Let me add to the benefits of insurance.
Okay, sir.
The benefits of cargo insurance that you said, in addition to giving you psychological relief, it protects your capital.
Yes.
It makes sure that your capital for the business is well secured. In case of any loss, you'll be able to get your capital and remain in business.
Yes.
So that will give you room to think about how to grow the business instead of worrying about what would have happened to the business.
Exactly.
And it also promote your investment.
Yes.
And it's a way of promoting international trade and adding value. And it's a way of bringing in the foreign exchange.
Yes.
To
the country.
All these are part of the benefit that you can derive from your capital insurance.
Thank you, sir. I really appreciate this contribution. So on that note, we are bringing this meeting to a close. I really want to appreciate everyone that's contributed. Thank you, Mr. Fatai. Thank you, Mr. Peter, and every other person. I want to say thank you so much. Let's meet again next week. Same time next week, between 5:30 and 6 p.m. Let's enjoy the rest of our evening. Have a wonderful evening. Bye-bye. Madam Omotola, I can cite you. Thank you, Mr. Fatai, Mr. Peter. Good evening. Oh, thank you so much. How's the day been?
Fine, thank you. And you?
Okay, do have a great evening. Let's meet again next week. Thank you so much.
Recording stopped.